Chair Powell, you mentioned ongoing discussions about the tapering timeline, and I'm wondering what the contours of that debate have been. For those that want to move a bit more quickly, is it about maintaining optionality for a 2022 interest rate increase, or is it about financial stability risks or concerns about the efficacy of asset purchases at a time when we have supply constraints? Thank you.
So let me say that there's very broad support on the committee for this plan, both as to the timing and as to the pace of the taper. So this was a unanimous vote today, and I'd say quite broad support for this approach. You're correct that there are some who would prefer to have gone sooner, and they've made their arguments publicly. For some of them, it's a financial stability concern, and for others, it's other concerns. They can make their own arguments. This is an approach that the committee will broadly support, and it will put us, having completed our taper sometime around the middle of next year, which seems appropriate. The asset purchases, as I mentioned, were very, very important in the early stages of the crisis. They were essential in restoring market function in the Treasury and other markets. Then, as the recovery got going, they supported aggregate demand, as they will do. And now we're in a situation where they still have a use, but it's time for us to begin to taper them. Their usefulness is much less as a tool than it was at the very beginning. And of course, this leaves the whole question of rate increases ahead, which is really where the framework is all about how we deal with rate increases and that sort of thing. So we think this is the appropriate way to go, and again, broad support on the committee.